This week, the markets faced a tug of war between explosive AI earnings, Friday's inflation data, and continued uncertainty. Stocks ended the week higher, yet beneath the surface, the market continues to stay focused on geopolitical uncertainty and a risk to a slowing economy and labor market. With Monday closed for Memorial Day, all major indexes finished higher in the shortened trade week. But volatility spiked midweek as trade policy uncertainty lingered, and Friday's inflation data added fresh fuel to the debate. Therefore, early week optimism gave way to caution, but cooling inflation and strong corporate earnings led to the advance. On Wednesday, after the close, Nvidia reported a stellar quarter, beating on revenue and earnings estimates. But they ran into some snags with the US export controls hurting their quarterly sales in China and making them cut guidance even further for the next quarter. But even with the shortfall in guidance for their China numbers, Nvidia's stock popped. This is driven behind the new AI reasoning models, which require hundreds, if not thousands of times more compute than the traditional generative AI models. Now, on the macroeconomic front, on Wednesday, a US trade court blocked President Trump's tariffs, noting that he overstepped his authority under the International Emergency Economic Powers Act. This would void the global tariffs that are set for July 9th. But as early as late Thursday, an appeals court put those tariffs back into place while the White House fights on, leaving investors now stranded in a bit of a limbo. Therefore, stock futures rallied on the thought that tariffs may ease, only to waver when shown that the battle is going to continue. Meanwhile, on the inflation front, Friday's PCE report showed that inflation just ticked up 0.1% in April, while consumer spending, which accounts for over 2/3 of US GDP, slowed to 0.2% growth in April versus the 0.7% growth we saw in March. Now, this signals that the Fed is probably more likely to cut rates due to inflation coming under control and back to their 2% target, and as economic growth seems to be slowing. Therefore, bond yields eased slightly as investors priced in the higher probability of a rate cut. But could the Fed cutting rates be good for stocks, or is this really just a sign that the economy is slowing and we should be worried? Now, despite these mixed signals, May finished as a very strong month with all major indexes up. But with tariffs still hanging in the balance, analysts note that inflation fears may not fully be put to rest and more concerns on growth could be down the road. So what's next for the markets? Nvidia has shown that there is still a long runway for AI growth, and Friday's PCE data shows that inflation is staying in check for now, easing the near-term rate fears. But the shifting tariff saga highlights that policy could hinder progress in a heartbeat. Therefore, as we head into June, I would monitor inflation and jobs or labor market-related reports for any surprises. And as always, stay alert to any trade policy developments. Drop a comment below, let me know what your thoughts are for the coming week in the markets. And as always, like and subscribe this video for more content and more context.